Hello, beautiful people, and welcome to another episode of Ninja Mouthpiece. We want to believe you enjoyed the last episode. Today promises to be another one that I want to believe in a time like this where a lot is going on when it comes to the I will call it housing industry, but they have a professional name that they will call it when they come to you. I'm not here alone. You always know that I'm a co-host. I have my boss and my friend and my colleague talking about no other person than Philip Ayodike, aka Mega.
Okay. Thank you, Maurice Imadu, also known as MC Morris. I'm not your boss. Morris our boss. We want to use this opportunity to welcome our viewers at home to this special edition of Ninja Mouthpiece, like you rightly said. And it is quite special because today, unlike what we've been doing in other episodes, we are having a titan.
Yeah.
Double for the trouble.
Yeah.
But it's not going to be trouble for you anyway. We're trying to provide solutions to a lot of things that have been happening out there. Like my co-host said, concerning the housing industry, the property industry. We have two gentlemen that are vast in the industry. And you know, to have it complete, we have a realtor and we have a broker.
Yeah, let's say we have beans and rice.
Yes. So you can't do without, we both can do without each other.
What about Dodo?
So today we have on this special edition, Mr. Nelson Akikube and
You didn't complete that. A heavyweight. Yeah. Canada, Toronto,
yes,
and the broking industry.
And in the property industry. Thank you. And secondly, today we decided to do something different. Like I said, we have Mr. Adil Wali. He's a seasoned broker. He's going to talk more about himself, just the same way Mr. Nelson is going to talk more. They're both going to read out their bio for the benefit of the viewers that will be listening to them. So we're going to be starting. And
Mr. Philip, the name sounds like Yoruba, sounds like Adewale.
No, so we're already interrupted him. He is Adil Wali, but like you said, Adil Wali.
So that's your Yoruba name from henceforth.
We'll tell you the meaning later.
So we're going to be starting taking the bio from my immediate right, from Mr. Nelson Akikube, as he's going to tell us brief information about brief bio about himself before Mr. Adil will take it from there. Thank you.
Thank you very much. Thank you for welcoming to Ninja Gist, Ninja Mouthpiece. Yeah, my name, as I said, is Nelson Oluwole Akikube. I'm a realtor, means real estate salesperson. I've been practicing now, still going to make my 18 years. I started in 2005. I've helped a lot of family to settle down in Canada, and I help a lot of people to buy their first home, to even introduce them to real estate, educate them how to get the property with ease. To this point, at least I have a large profile of client base in real estate business entirely. Thank you.
So when you're bringing up someone who's garnered experience as much as 18 years, then you're dealing with a bushrat. And after he's all said and done, we're going to be listening to Mr. Adewale as he's going to read brief of his bio for the benefit of our viewers.
Thank you, Phil. Thank you, Morris. Great to be here. I have been in the finance industry for almost over 10 years. I was a Scotia mobile mortgage specialist for some time. Then I started my own. I'm with Mortgage Alliance at the moment, leading a small team. And it's been a fun ride so far. Roller coaster, as we say, especially nowadays, ups and downs. But this is what real estate is all about. Thank you for having me again. It's fun, and I look forward to having a conversation with you guys.
Wow. Thank you so much, Mr. Adil. So today we're having two heavyweights. That's going to be a lot of puzzles surrounds property business these days.
Yeah.
So if we have someone who's got over 18 years and we got someone who's got over 10 years of, experience, making it possible for people to live in the comfort of their own homes, then it means we are not making mistake here in Naija Mouthpiece, right?
Yeah, that's very correct. So let's go straight to Mr. Nelson.
Okay.
We want to jump straight into the problem that is surrounding the owning a house right now, because a lot of people are even selling right now because they said the taxes are going up and the amounts they pay for mortgage are going up. So what is happening right now in the housing industry?
Yeah, well, it's usually the case. This is not the first time. As you should know, real estate move in a circle. So sometimes when you launch into buying a property, make sure you buy something within your budget. You have to be sure you'll be able to carry the mortgage and be able to show that this is what you really want. Now, with the situation of things going around, everyone knows that there's economic crisis all over everywhere. There's increase in interest rate that affected those people that maybe they signing for lower interest rate or variable rate in the past. So when the interest rates were increased, it affected them so much. By the time they refinance, it become like somebody paying 2,000, all of a sudden jump to about 6,000. That's make it so difficult for people. Before that, it's always good to educate people how to buy a property. In the case of people that are coming in for the first time, what you need to know about buying the property, first of all, you need to get yourself pre-qualified, make sure your credit is good, the income is there to be able to avoid the certain property that you want to buy. We look at the property for the client that will fit your need, not want. So people say, well, I want this property. I may not really fit into their need. You should buy what will fit into your need so that there won't be any problem. Don't say, oh, my friend bought $2 million property. I want $2 million property if you cannot service it. So what you buy should fit into your need. So buy as little as you can afford. If at all, if there's increase in the interest rate, you will still be in a situation to manage it. But if you carry a higher mortgage and the interest jump, that become an issue. That's why you see a lot of people, hey, I can't go along with this one, I have to sell, then they have to sell. There's no other trick behind it, except you have some other means of income, or probably you have a large sum of money to pay down your mortgage. Even though you have a higher interest rate, you can still manage the mortgage payment. Thank you.
Thank you so much, sir. My question goes straight to Mr. Adil. Here in Canada, there are two different SIN numbers. The nice SIN and the permanent SIN. That starts with either 5 or 1. With my own understanding, most banks, you put up a file right in front of the person that treats the file in the bank. At the end of the day, the moment they spot the nice SIN, they close the file. What exactly is wrong with the nice number?
It's a great question. So how it's been happening with typically prime lenders, or we call them A lending, is they have been very strict on their lending guidelines. So if you're a permanent resident, then yes, there's a whole new programs that they have for you. New to Canada program, high ratio mortgages, and the conventional mortgage if you're putting down 20%. But if you're not a permanent resident, which is a temporary resident, which includes student visas or work permit, then there's certain guidelines, which is not even by the banks, it's primarily by the government, like how they stopped stopped a lot of foreign investments a couple of years ago. So what lending criteria has changed among that guidelines is if someone's on a work permit or on a student visa, it's very difficult for them to obtain a mortgage, especially in this market. So it becomes very easy. And moving forward to what Nelson was saying, that yes, there was at one point people were buying homes back in maybe pandemic time when the interest rates were rock bottom. They were buying homes they were holding mortgages for $1 million and their payments were $3,000. As soon as the prime rate started hiking or jumping up, their payments went up from $3,000 to maybe $6,000 to $6,500. A lot of permanent residents are still within their homes because they want to take care of the credit. They don't want the credits to go bad. Whereas a lot of people who were on student visa or maybe even on a work permit, they won't be able to sustain a mortgage like that. And again, these things in Canada, because of these strict lending guidelines, it helps us to not see a crash that we saw back in the US back in 2008, because the lending guidelines were very easy. Anyone walks into a credit union or a bank was coming out with the mortgage approval paper. You're putting down 5% or even up to 2% on a $500,000-$600,000 homes. So yes, we have a bit of a strict lending criteria in Canada, but that's what's helping us not see a market crash, and that's one more reason why we see real estate slowly and gradually just keeps going up.
Okay, I'll just take it a step further. Even if they decide to approve you for mortgage, why is it that what they offer most times, especially to newcomers, are always very low when they know the cost of property out there right now? I could remember there was a time I was talking to my mortgage broker and it was like, oh, what they could approve for me at that time was about, I think, $590,000. When the list house you see around it starting from 800 to 1 million. So are you approving 500,000 for me to move to my village? So what do you want me to do at this point?
Yeah, again, it's a very good question. And this is, so you were probably approved for a first-time home buyer, high ratio mortgage where you put down 10% or even less, 5%. And it's unfortunate that we don't have anything under $1 million at the moment. So even if someone gets approved for that $50,000-$60,000 down payment, looking up to a $500,000-$600,000 home, you won't find a home in that price. So now there's something new that they came up with, and it's not the government, it's private equity companies. So it's called Equity Share Program. So let's say if you get approved, you only have 10% down payment, which is $50,000 for a $500,000 home. The minimum property that you can find is for $1 million. Now I can get another $50,000 or maybe even up to $150,000 to come up with that 20% and get you a conventional mortgage of $800,000. So let's say, I'll just give you a brief example. So he gets approved for $500,000 home, but he only has $50,000 down payment. Now we can't find anything in that price range. So what we can do in turn is I can get $150,000 from the market as equity share. You have your $50,000. Now together we have $200,000, and then Nelson can find you a home up to $1 million. So now you're putting 20% as opposed to your own 5%, which you wouldn't have qualified for. So now there's more ammunition for you to go out and look for a home because of the down payment structure.
Thank you so much, Mr. Wali. For the benefit of our viewers out there too, I'm going to come back to you, Mr. Nelson. Once you're on the street listening to people, they tell you in Canada, especially in Canada, comprises of the whole provinces in Canada and territory. Not minding the fact that there are some territories that are more demanding, there are some provinces that are more demanding. On the average, what is the ratio for somebody, for a new, first-time home buyer in Ontario? Because I'm going to use Ontario as yardstick because we're in Ontario. If I'm going to buy, for instance, I want to buy a house that is worth $1 million, what is going to be the down payment percentage ratio for that, for $1 million house? So I need him to say something.
Yeah, definitely the moment you hit $1 million,
Yes.
normally you're looking at 20% down payment. That's like 200,000. So then it's not only based on your down payment. There are so many criteria that is required. You have to have a very good credit. Your income has to be there because they have to do the GDS to see the ratio. Maybe you qualify, and there's a qualifying ratio that the bank or the lender use to qualify you. So if you have the 200,000, then you still have to meet up with the good credit. Your income have to qualify you to be able to service the mortgage. So those are the requirements that is needed to be able to qualify for such amount.
Right. So can you take it from there?
Yeah, I mean, Nelson is right. Anytime the threshold hits $1 million, you're looking at 20% down payment. And yes, of course, it's not just, I get a lot of clients coming into my office and saying, we have $200,000 or 20% down payment, we want to buy a house for $1 million. So it's not just that, it's a lot of other lending criteria. So you have to have excellent credit, as Nelson mentioned, and income that to support or to afford that mortgage payment, and a lot of other criteria, where the property is available or where the property is located, what kind of property it is. If you are under $1 million, and that's when you have the 5%, 10% down payment structure.
Yes, sorry, talking about the income. Now, if a family is buying a home, that's husband and a wife buying a property, and the property is like we're talking about threshold of $1 million. If what is the the income that's expected of that family, to aside the fact that they are okay with their credit, they have the $200,000, which is 20%. What is the income threshold for the family to qualify for that?
Again, a very good question. And yes, we're looking at about $200,000 down payment set aside. Nowadays, we're looking at anywhere between $200,000 to $220,000 if you're looking at qualifying them with prime lending. Approximate numbers, of course. It all depends on the liability you have. But yes, this is an approximate number.
So with that, the lender will see you like somebody that is capable of financing your mortgage, right?
Correct, up to 80% loan to value. So they can lend up to $800,000 on the property.
In addition to that, I think they are expecting you not to spend more than the 1/3 of your income. You can't just be making certain amount and you are pushing all the income towards mortgage payment. Because there are some other things that you still have to incur on the expenses and all those things. So that gives a clear cut that certain percentage have to be towards your mortgage. When they do the ratio, they know that, okay, you are making this much income. They will calculate the ratio. If you fall between that 1/3, then definitely that will sum up to qualify you for the amount.
Okay, I want to ask, is there not like a fixed rate that someone can pay, like after buying a house? I know a lot of people that, okay, during pandemic, they bought their house and they moved there and they were paying $3,500. Just like my phone bill now, I have a fixed amount I pay every month. So is there not a fixed amount if you buy a house that you can continue paying instead of sleeping with $3,500 today and wake up with $6,000 tomorrow?
Because of inflation.
Because of inflation. Is there not a fixed amount?
Yeah, there is fixed rates. So again, during pandemic, we were looking at fixed rates between 2.5%, and they were fixed for 5 years. So if someone got into a fixed rate, let's say for example, for $500,000 mortgage, they're still paying the same amount, $1,750 to $1,900. It's people were a lot of clients and a lot of borrowers were just going for the variable rate because variable rate was very low. You were getting, I've seen people getting qualified for 0.99%. So of course, if you have an option between 2.5% as opposed to 0.99%, I don't think anyone would have gone for 2.5%. And it is unfortunate that those are the ones who are suffering at the moment.
Okay, so if I may ask, aside the B lenders, which happens to be the smaller banks, smaller financiers,
correct,
does the big banks do the fixed rate?
Yes, of course.
Yeah.
Banks do fixed rates anywhere between, they have a 1-year term, 2-year term, 3-year, 5 years. Now I've seen a few banks even up to 10 years, 7 years, yes.
Okay. So as a newcomer, where is the best place to look out for in buying a house right now, Mr. Nelson?
Yeah, being a newcomer, there are so many things that is attributed to buying a property. If you are a newcomer and you are working in Toronto, I can't tell you go to 3 hours away to buy a property. You look at the inconveniences to come to work. But if you are a newcomer, you have to consider few things: the location and how far is your workplace to this place where you want to buy a property. So, and what is the demographic of that area? You have to look at some people, they are more into ethnicity and culture. Oh, I want to be within certain area where there are people that you can easily relate to. And then you have to look at where is your employment going to be. Are you going to school? Where are you going to be schooling? So you have to consider all those things before a realtor will tell you, okay, I think this will be the best location for you. You can't just say, oh, this is the best area, but there are so many factors that is associated to that. You have to look at what are the area that really fitting. So if you discover those things, then you can advise the client that I think this is the area that is best for you to buy the property.
Okay, so
but you have to.
There's no area that you can tell people that, oh, buy here, it's going to develop very soon, and all of that.
So that's a different question. If somebody is buying for investment purpose, that I want my investment to grow, where can I buy at a lower price?
Okay.
Are you looking to buy to rent it out, or do you want to live in? If you want to live in and you want to from there go to work, you have to decide, is it convenient for you? But if you are buying for an investment, okay, if I buy here, take for instance, there was a time I was advising people to buy a Durham region and Oshawa, because Oshawa people look at Oshawa data as a neglected area, so no, we're not going to buy in that place, is out of the area. Yeah. So those people that bought in that area at that time, they were buying for 400,000. So all of a sudden, the property of 400,000 within 3 years, we are now going to about 800,000. So those are the things you have to look at the situation of things. This area might probably have an improvement in the future. Maybe there's some development coming over here, and the prices are more reasonable and more affordable. So at that point, I can tell the clients, if you know that is suitable for you or you can afford it, then go to this area. This one is cheaper. Your mortgage will be lower. And at the same time, the rental may not be as high as Toronto area, but compared to the mortgage payment in Toronto, is higher than those kind of property. Your mortgage payment will determine the type of the rent that you charge the tenant. So for investment, then you can go outskirt a little bit to buy cheaper property.
Yes, thank you, our viewers. We still have them loaded, and we're still going to have more from them, but we're going to take a short break, and we'll be back in a minute.
it's another time of the year. Ekimogun Association of Canada is inviting all sons and daughters of Ondo in Canada and around the world. Their 2023 Ekimogun Day and 30 years anniversary comes up on 2nd of September 2023 at the Runa Banquet Hall, 30 Godin Mackay Road, Toronto, Canada. It is with great honor that we are inviting you to join in a success story at this year Ekimogun Day 2023, holding on September 2nd. For inquiries, contact our social secretary, Mr. Dikbo Olapade, on +1 416 986 0009, and the assistant social secretary, Chief Ebenezer Akinagbe, the Barber of Ondo Kingdom, on +1 416 568 7758. Ekimogun Association of Canada, love and kindness to all.
Okay, welcome back, guys. It's been a wonderful time with Mr. Nelson and then Mr. Adewale Adio. Okay, want to believe you are having a good time, and we continue now. Mr. Nelson,
Yes.
You've been in this business for like 18 years now.
Correct.
Now, how long have you been in Canada?
I think I should be about 30 years. 1990. What is it? Over 30 years. Oh my God.
So, Mr. Nelson has been in this business for 18 years and has been in Canada for over 30 years. Can you tell us a little bit about your arrival in Canada? What are the jobs you did before going into this job of a realtor? And when you came, how was Canada? Was Toronto a bush? Was Mississauga another bush? And because 30 years ago, we are sure you should have bought everywhere. The whole bush.
Well, that's a very interesting one. When I got here, I always share with people. When I first got to Canada, I was coming, I put on my suit. And somebody told me, where are you going with this suit? Where's your jacket? I said, this is jacket. I have a jacket like that. When I got to the airport and I realized that when I step out, oh my God, it was so freezing. And when I open my mouth to talk, I see some smoke coming out. I say, but I'm not sure. Go now. Why is smoke coming out? Very cold. So then that is my arrival to Canada. At the end of the day, I was able to at least start up by as a normal person that comes to Canada. I started off working in with Sears. I work in the kitchen. I started from dishwashing. So the dishwasher, when they realized this guy is very active working dishwasher and other stuff, and they promote me to prepare sandwich. So I moved to the front, then, oh, this guy is good. And from there, they moved me to CFTO, TV station. So I was getting increase in salary, and from there, I went to school. I went to the Fry College. I did some program and all those things. After some time, I started my own business. I have, it's more or less like Toys and Us for children, crib, bed, and something. We call it Lisi G. It was a downtown Dauphin and St. Clair. So I want the Italians. So we have a store there running the business. And most people that come around, oh my God, how do you think of this? You just came to Canada. You have all this stroller, crib. Some people, we are so passionate, we saw some pregnant women that were struggling to even avoid to buy a stroller. We gave out to some of them. Some of them, they bought crib. We just at a discounted price because we loved the country so much that, hey, what can we give back to this country? So gradually, I started buying property. My landlord approached me at that time that, oh, can you buy, we would like to buy this building and look at the building, very old building. It's at the corner of St. Clair, close to the bank. I said, no, how much was he offering me? Maybe about 280,000 at that time. It's a store at the bottom and has about 3 apartments up on the top. I said, no, I'm not going to buy this very old property. Then I realized that these prices are just what they said about 300. It has increased to about 500. And I told my wife, I think this thing is a very good thing. Let's get into real estate and start investing in it. Then I bought my first property at Kill and Dundas. So one of the old property there. It's a very old one. I have tenants. They were living there. Because I learned it from my landlord, it's an Italian person. Whenever anything happens, it was the one that will fix it. Because then I become the serviceman of my tenant. So everything got bad, I go there, fix it. They pay their rent. How much they pay at that? I think they are paying $950 for the whole house.
Wow.
And my mortgage then was about maybe $780. So it covered the mortgage. I still have about $100 coming to my pocket. So I started off from that. Then we started investing here and there. Then I said, well, this is very sweet. Let me go for the course. That was when I went for my Realtor license, and I got the license. From there, I've been trying my best to be like you. So, and I've been helping so many people in acquiring their property.
Thank you so much.
To
That's
date,
quite inspiring. We need to know how your journey is.
Same question for you.
I came here as a teenager, over 25 years ago.
That's a long time too.
Yeah, and I remember when we first purchased our property, my father did. It was 98, 99 in Mississauga. It was a big house, 3,000 square feet, 4 bedrooms. It had a complete finished basement. Just imagine the price back then was $305,000 or $15,000.
I think you once shared that with me.
Yes. So, times has changed. Canada's immigration. I mean, we are just 1 million people came just this year, starting from January 2023 till today. And the way immigration is going, there's no way real estate will suffer. I mean, the best investment in any market is your real estate investment. It doesn't make you rich overnight, but we over 25 years ago we moved here. My father purchased the first property. We even bought a building in Mississauga on Lakeshore, but that was in 2000. It was 3 floors with 10 or 12 apartments for $700,000. Yeah, and that was in the year 2000. So, I mean, I can't thank my parents enough for moving to Canada, and it opened up a bright future for us.
So we may ask, where originally are you?
So I was born in Pakistan. But I never lived in Pakistan. We lived in the Middle East, where a lot of Pakistanis are living, in Saudi Arabia and Dubai. So we moved here in 97, 98. And I mean, not a lot of people lived in Pakistan. Because of the poverty, there's no jobs, and there's a lot of corruption in our country, and there's no security. I still talk to my friends, and sometimes they tell me, you can't even go out with your cell phone in your hand in the city where I was born, because someone would just steal the cell phone. So that's why a lot of people were living abroad. We were in the Middle East, we moved here, and of course it's been a roller coaster, lots of ups and downs, but can't complain. Overall, it's been great. Couldn't have asked for more.
Mr. Nelson, this question is for you. Right now, as it stands now, there are a lot of rumors going on. It's that it's better to be a tenant now than to be a landlord. How true is that?
It depends on your capability. Being a tenant, it's like you are helping other person to service their investment. So home ownership, the pride of ownership is always there. So even if you are a tenant, the money you are paying is that you are just throwing in the garbage bin. So owning your own property, no matter the situation may be, the interest may be high. You may think, oh, I'm paying high now. It's always good to own the property, no matter how the case may be. So I will always advise people, if you have the down payment, no matter how small it is. I was talking to one Chinese guy the other day. He said that he would prefer, if at all, if the size of the house is the size of what's it called, a matchbox. So if it as small as that, provided it's gonna sit on the land and his name's gonna be there, he will prefer to try to squeeze himself inside the box that this is my own. So tenants, yes, okay, tenant should be a temporary thing, but your dream supposed to be, how am I going to hold my own property? It's a very good thing to.
Because I was having a discussion with someone yesterday who actually bought a house, and then these days he doesn't even stay in the house. Still talking about this whole rise in the mortgage right now. He doesn't stay in the house because he spends more time outside working to pay for the house he is not living in, the mortgage that he is not living in. And at a point, he can no longer travel. He cannot do the things that he used to do before. Even as a tenant, you can always lock your door. You know, it's about 2,000 plus, and you are out for like 2 months or 3 months. But now, even the tenants you have are paying, it's not enough for you to service. To be sincere, he told me he was paying about 12,000 every month right now.
For the mortgage?
Yeah. Spend about $12,000 monthly right now. So as such, he's always outside. He spends lesser time in the house. So is it advisable to stay outside working for a house that you are not living in because you are a landlord?
Yeah, the thing is, literally, the guy is an investor. The home become your investment. Living outside, you are working towards, is like setting a goal. This is my goal. This might be for a year or 2 years. Paying that much amount doesn't mean it's going to be forever. And when you pay the mortgage, is P&I, principal and interest. You have a compulsory saving that you are making that you may not know. Out of that 12,000, portion of it is going towards the principal. It's reducing your debt. So if you have a tenant or whoever that is living there, is still on a win-win case. So for him, it's better for him to start doing whatever work he's doing, to hold the property. The interest rate will still come down. It can't be like this forever. So the joy of having it, on the other hand, the property will definitely appreciate. Let's say the property now is $1 million, even though the market is still struggling, everything is going this other way, paying down your debt. On the other hand, the value will rise. So for him, it's a good thing. So he should give that sacrifice that, hey, I'm working for my investment. Look at it as an investment. That's what I can advice I can give such a person.
Thank you so much. We appreciate you.
Welcome.
I'm coming to you, Mr. Wali. You are more like a bank that we have. Yes. What is the government doing to alleviate this hardship on people, because it has become hardship? Even you go downtown Toronto, you see a lot of people sleeping on the street, and this is not what Canada used to be. What is government doing to alleviate people that has invested their money into pre-construction? At the end of the day, they're losing money here and there. Some of them, they borrowed money from friends, and some borrowed from banks, maybe to sustain their business, and they decide to invest bit of what they borrowed into property so they can have a roof over their head. But as it is right now, a lot of people losing their money. What is government doing to save them from this issue that have been on everybody?
Well, on top of my head, I know that government started a program for a first-time savings account for a lot of first-time home buyers who want to purchase a property and wants to put some savings towards the down payment, so it's not taxed. I don't know much of the details, exactly how much of it you can put per year, which is not taxed, so I don't want to comment on that. But yes, there is this program. But overall, what you mentioned, how a lot of people have purchased pre-construction homes, and they are losing money, as Morris was mentioning. I look at it in a way, and again, I would second what Nelson said. So if he's paying $12,000 per month, and the property is rented for even 6-7, he's putting down $5,000 from his own pocket every month. At the end of the year, he's dished out $60,000 towards the property. But again, this is an investment. So in 2 years, or let's say 3 years, the property goes up $500,000, or even $300,000. Let's be very conservative on it. $300,000, the property goes up. So instead of $1 million, the property is now at $1.3 million. Even if you look at this, 60,000 times 3 is 180. So the person at the end of 3 years is still over $120,000 in equity. So yes, real estate, of course, it's when we talk about positive cash flow, I understand that's become a bit of an issue with the rising interest rates. But overall, if you look at it from the equity side, you're still in the positive towards the end of the time. It all depends if you can just hold on to it for a couple of years when you dispose it. And even if you take out the carrying cost plus what you were paying towards the lender or towards the property, you still come out positive. So yes, again, I mean, I would recommend people, if someone has a down payment in this market, still purchase a property. And I'll tell you, let's say, for example, if someone buys a property right now, they get a discounted price because, of course, it's a bit of a buyer's market. They buy this property, they hold it for 2 years. Yes, for the first year and a half, they're paying more in mortgage interest payments. But what happens is 2 years down the road, they refinance the property, take some equity out, get a new commitment, or get the refinance at a lower rate. And what they do with the new equity that they take out, purchase another property. Guess what they just did? They bought 2 homes with 1 down payment.
Quick one before you go on there. I am going to talk from a scenario of a friend who invested money into reconstruction. At the end of the day, when it gets to the time for closing, the interest rate out there wasn't friendly. He couldn't close. He wanted to close. Nobody want to invest as much as $100,000 on a business and walk away. So in a situation whereby he looked at the father, the whole figures on the table for him, if he decides to close at any rate, he's going to be paying as much as about $12,000, the same thing you talked about. So if the person gets into the contract and he realizes that he cannot come up with $12,000, so what would you advise such a person? If he doesn't walk away, he gets into a contract that will make him be paying mortgage of $12,000 every month. He looked at his resources, whatever he's getting funds from his work. He's not earning that much. The whole family cannot make $12,000. So what would you advise such a person?
Again, I mean, it all depends on your personal capability and ability on how long you can stretch yourselves. Yes, times are a bit tough, especially because of the mortgage rates. The appraisal's coming a little lower. If someone's closing and if they have the 20%, they don't feel that $12,000 would be feasible for them, then I would always advise to close with an alternative lender, with an open term, close it, and then just put it on the market again. So just sell it again. The worst can happen is you're just going to get your money back. But instead of losing, you put it up back on the market. It's always advisable to close.
But if it is a property that already comes short,
appraiser
comes short the original value.
Yeah,
so what would such person do?
Yeah, again, I mean, it's a very difficult question to answer because, again, it all depends on the personal ability. I mean, if someone can hold on to it, of course, I would advise them to hold on to it. If they can, then sometimes you have to make harsh decisions in business and cut your losses short, because you don't wanna get into something again, when Nelson started his conversation, he made a very good point, talking about getting qualified as opposed to what's affordable for you.
Yeah,
So
very
we can qualify as mortgage brokers. I can qualify someone for X amount because I have access to 87, 85 lenders. One of them will qualify but it all depends on the personal ability, if it's affordable for you. So sometimes I get people walking in and they're like, I want to buy this house, again, as he mentioned, because my friend lives in that sort of a house and we have to keep that standard of living. I always tell them, yes, we can qualify you, but is it affordable for you? Again, is $12,000 mortgage may be affordable for one, may not be for someone else. So it all depends on the personal ability, if they can hold on to it. I always say, with stocks, with any sort of inventory, real estate, stocks, whatever it would be, it all depends on the holding power. If you can hold on to it, you always come out positive.
Another thing I may want to ask to that, because it has been a very terrible situation. It happens to everybody. It happens to real estate person, to mortgage broker. Everybody invested in pre-construction. So being a mortgage broker or real estate person does not exempt you from this whole thing that is going on. So I've seen a situation where such a thing happened that I just asked the guy, you know what, at this point, your money is stuck. And now the value has dropped maybe another 150,000. Where are you going to raise it? The only way, if you can look for somebody that understand real estate, if they want to partner with you to put in money, so both of you can hold the property and hold it together for a couple of years. So you guys become like a shareholder on that project so that you don't lose your 100,000. Let's say you are short of 100,000 or 150, you have any partner or anybody you can talk to, look at this property, let's see if we can do it together, then that person can come in.
But the funny thing is this, because I'm speaking for the community now.
Yeah.
That same person that understands real estate business that you want to beckon on is already a victim somewhere, because almost everyone, let me say 75% of people that are in business they've already invested into this mess.
Yes.
That's why you call on your friend that I have an issue going on right now, and he tells you, boy, if you listen to my story, you will know that you're even better than myself. So almost everyone going through the same thing. Like you said, even real estate, like yourself, practitioner, you're going through the same thing. Himself as a broker 100%. Is going through the same thing. So who do you beckon on? Everybody's just managing their stories, you know. That's exactly, I'm trying to...
Yeah, I understand where you're coming from. Yeah. There's some lender that help somebody of recent. They say, okay, we going in with you. I think it was short about 80,000. So we'll register the 80,000 on the property. Even though the guy put about almost, when you look at his deposit and everything, it's almost 15%. But something happened that I cannot continue. Then you approach a private person. It doesn't have to be, you have to approach somebody that is liquid. If you approach somebody that is going through the same issue, it's a blind man leading that issue. So there are some people that has the money that say, okay, I'm going to invest, but I'm going to be equity partner. It's not like giving you private on interest only, but I'm going to be on this property. Both of us will own the property, and they will sit on it until the property appreciates. Okay. So that could be possible, but it's not like 100% guaranteed to, but I've seen a scenario that such a thing happen.
Sorry, Morris, I also wanted to bring a point. Real estate is all about cycles. So what Phil is talking about, it's true and it's happening in the community. We've all seen it. I think it's basically what happened was after the pandemic, or just during that time, the market just shot up. End of 2021, first quarter 2022. Everyone in the household, whatever party you'd go to, family dinners, everyone's like, if you don't buy real estate now, you're gonna miss out.
Yeah.
So what happened was, of course,
a
builders
bubble market,
took
yeah.
advantage of it too. The prices were high. So what you're saying, yes, we have faced it also, that a lot of clients come in, but that timing is, if someone purchased a pre-construction in 2022, and the closing, and that must have been the third phase of the pre-construction, because the closing would have been in 2023, a year's time. Their, due to the hike in interest rates, their appraisals were coming low. But if you look at the same development, if someone purchased during phase 1 in 2019, and they were closing in 2023 as well, their appraisals were coming way more than what they had purchased. So yes, it's a speculative market, but again, it's the timing you're getting into the real estate.
Thank you so much, viewer. To put this segment to a hold before we go on a break, I'm going to quickly say to us the essence of Niger Mouthpiece is to make us understand out there that there is no one in Canada that doesn't have his day of little beginning. Regardless, even if you are born in Canada, you have your days of little beginning. You just heard what Mr. Nelson Akikugbe talked about himself when he arrived in Canada and how he was able to weather the storm before he became what God has made him to be today. So please, people out there, if you are new in Canada and you feel you want to jump the process, you want to get on the top, you're going to fall down. It is not negotiable. Everybody has their days of little beginning. So be very, very prepared to go through the winter, the summer. So it is the winter first, which is going to be the pain. Then before the summer comes, when it is the time for enjoyment. So don't feel because you came during summer, I'm just using this as as an adage. Don't think, oh, I came in during the summer. Guy, the winter is waiting for you when you're going to go to the factory. You're going to be waiting for the boss, and you're going to go through the same thing every other person has gone through. That's just a word of advice for you out there. So we're going to go on a short break before we come back in and before MC Mori takes his question. Thank you so much.
Hooray! It's another time of the year. Ekimogun Association of Canada is inviting all sons and daughters of Ondo in Canada and around the world. Their 2023 Ekimogun Day and 30 years anniversary comes up on 2nd of September 2023 at the Runa Banquet Hall, 30 Godin Mackay Road, Toronto, Canada. It is with great honor that we are inviting you to join in a success story at this year Ekimogun Day 2023, holding on September 2nd. For inquiries, contact our social secretary, Mr. Dikbo Olapade, on +1 416 986 0009, and the assistant social secretary, Chief Ebenezer Akinagbe, the Barber of Ondo Kingdom, on +1 416 568 7758. Ekimogun Association of Canada, love and kindness to all.
Okay, welcome back, viewers. I believe you're enjoying and learning as well. Okay, my question right now is let me take you back home a little. I don't know how it's been done in Pakistan, but Mr. Akikube knows how it's been done in Nigeria, and I don't know if Canada it's ever going to come to that reality where I'll come to your house, I'll look at it, I'll price it. If it's not okay by me, I walk away. But I've heard a situation about someone that's paying mortgage and he does not have a house. How did this happen? They said he couldn't close, and because he couldn't close, that when the seller got another offer, it was not up to what he was bidding for, kind of, and then he has to pay the difference. So I don't know how that.
He won the bidding initially,
Right.
so he put down part payment for the bidding
Okay.
after he had already won the bid.
Yeah.
Now, when he wanted back out, other people that were coming, the amount they were offering wasn't as good as what they bidded for initially.
Right.
So the owner of the building now said he has to be paying the difference because he already has a winning bid. So that's the question.
That's a legal.
Yeah, I
Yeah.
mean, more of a realtor question, but I can just tell you, I mean, it all depends on when you're bidding and the offer you're presenting to the seller. It all depends on what conditions you have in the offer. So if it's a firm offer and you bid and he accepts and now you put in deposit, you can't go back.
Yeah.
Because it's
Exactly.
firm,
That's
it's
exactly
firm
what-
and binded, you know.
Yeah.
But if you have conditions of inspection, maybe you have a financing condition up to 5 business days, then yes,
Yes.
you can back
So the key question I'm asking now is that are we going to get to that stage, just like the stage of pre-construction right now, where I can tell you that I couldn't meet up, I can't continue, give me my deposit and let me go? Are we ever going to get to that stage?
No,
in Canada?
unfortunately, I personally don't think so. What can happen is, I mean, you'd have to close if the market is a appreciating market. Even with the interest rates high, you can close and put it up for sale, and that's when you can just get the deposit back, plus of course whatever the appreciation is.
Oh, so that means that when it goes up, you also benefit the same way it goes down and you lose your money. So let's just say the real estate business here, it's a gamble business.
To me, I would not say it's a gambling business, because when you are venturing into real estate, okay, let me go back home. Our mode of business is commerce. We like buy and sell. Oh, this guy is selling rice. Everybody is buying rice. Everybody will rush there. They will buy, sell rice, because we want quick money. But in real estate, it's a long-term investment. You have to prepare yourself before you venture into buying a property. So if you are looking at that, you have to look at, okay, this thing here, if I'm venturing into it, I'm not expecting to get a quick return. It may take longer. So if you commit into any project, you put your deposit down. There's everything have modality. You can't just say, oh, I don't want to buy anymore, can I have my money back? It's a process. So the seller, also, you put the seller in a situation that he will lose a viable buyer. So that's why you lose your deposit. And you don't lose deposit automatically like that. It has to be in trust account of a real estate company. So there will be enough reason for you to lose that deposit. So the real estate company cannot release the money if you never sign a mutual release. The money will be in trust account. So only courts can decide. If you are not signing the mutual release, it has to go to court. Then after court judgment, then they will decide maybe the full amount of deposit will be released to you, or maybe you have to have something from that
so
amount.
From the
that-
moment you walk away does not mean you've lost your money.
No,
You
that's
still
a
have
process.
chance. So,
Yeah,
okay.
that's a process. You have to sign mutual release before they can release that money to the seller.
Yes, I'm going to speak to you so you can speak to our viewers out there. A lot of people get into contracting without looking at the basics, studying the contract perfectly before they endorse the contract. And this happens so often in property business. because we see that people feel that builders take advantage of them. But from my own understanding, because I studied law too, I understand a bit of property law. If people give room and time to study the contract, most people will not fall victim of what they are going through right now. So what would you want to advise? I need you to advise our people concerning contractual aspect of mortgage.
Again, a very good question. Mortgage commitments are pretty straightforward. The max I've seen is up to 12, 13 pages. So sit down with your mortgage broker, go point by point. It's only going to take you an hour to go over it. There are certain conditions with the conditional commitment. There are firm commitments with no conditions. So go over it with your mortgage broker. Ask as many questions as you want to. And of course, he will explain to you. The bigger portion or the bigger issue is not the mortgage commitments, is more of the agreement purchase sales that comes from a builder, and that's this thick, sometimes 120 pages. I would strongly advise, and of course Nelson will second that, go to a lawyer as soon as you signed an agreement purchase sale. Go to a lawyer, have your lawyer review the document or review the agreement, and then you can go back. You have I think up to 7, 9.
Yeah, there's a cooling period of 10 days.
Correct.
That when you sign the agreement, that cooling period, you take it to your lawyer to review. There are so many clauses. There are so many hidden clauses. Because because I did a lot of pre-construction, I always tell them, there are some, they say, oh, we never knew we were going to pay HST. HST, is it included or in addition? So you have to know all those things. Sometimes you buy a pre-construction, maybe it's 800,000. There may be a clause that's HST included. One may say in addition. So on the day of closing, they're asking you 13% of HST. You say, oh, but I bought for 800. Why will I pay 13%? And you already signed. So it's always good to know all those things. And there's this rebate on HST from the government of 25,000 or something like that for new home. 24,000. So all those things need to be understood by any buyer. And there's assignment clause. Assignment, you say there's assignment. What are the things behind the assignment? Some assignment will say that you pay 20,000. Some will say 5,000. So you have to understand all those lines precept by precept before finalizing within that 10 days of cooling period. So a lawyer advise you to that.
The lawyer may charge you some small fee, but it's very highly recommended because this fee, whatever you're paying to the lawyer, 500,000, 1,500, whatever it may be, may save you in thousands and thousands when the closing is coming. Because a lot of times, it happened with me also, one of my closings, towards the end, my developmental charges were not capped. So towards the end, and I just didn't go to a lawyer when I signed my agreement purchase sale with the builder. Towards the end, we were looking at $50,000, $60,000 in developmental charges. So my down payment was just got raised by $60,000, and there is nothing I could have done. Either just lose my deposit, go in default, or come up with that funds. So I would always advise to have a lawyer review the document.
Wow, thank you so very much. Both of you have done justice to our questions. But before we round up, as we're rounding up, to be honest, we'll need you to give a parting speech. You are speaking to Niger community and the whole world, and most specifically Niger community. What would you want to say to them? Please use this opportunity and tell them what you have.
Well, it's an honor being in front of you guys and talking to you. I've known Phil for quite some time. Not just we've done business, we have developed this friendship. And yes, if you have any questions regarding the mortgage, even if you need any advice, you can always call me directly. You can contact Phil and he can get us in touch. Don't hesitate. It's always good to have a mortgage broker, a realtor, a lawyer looking at your for your best interest. So again, I thank you guys for watching, for having me on board. Thank you, Morris. Thank you, Phil, and giving me the chance to speak with the whole community. I've had very good memories. I've had really good Nigerian friends, and Rashid Yakini was one of my favorite soccer players. I think it was 1994 World Cup.
You're right.
He was my go-to guy. You know.
And Mr. Nelson, before you also give us that, for someone like us that do not have money, are you planning any zero down payments for us to own a house?
Yeah,
So that we can walk away
yeah, it's too late. We did this one in the past. A lot of people that I helped, some of them may be listening to me, that I helped them with the zero down payment.
Wow.
That one happened in the past, and we, which is very legal. It's, the bank were even offering zero down payment at those times. So, but at this time around, sorry, it's too late.
You need money more than us.
So, to offer you zero down, you need to work more, work harder, and make this possible.
But I will just quickly take a second.
Yes.
If you want to buy a pre-construction, and this is again for all you viewers, if you guys want to buy a pre-construction, contact Nelson. He's going to get you guys a very good pre-construction properties or projects. I have a program for zero down payment, only on pre-construction, guys.
Yes.
But please have a very qualified realtor like Nelson, because he's going to look at the prices. Because when builders are selling you properties, they're selling you properties based on the speculative prices, that what the property will be in the next 3-4 years. So once it's coming for closing, contact me, and I'll have you get the commitment, mortgage commitment, up to your purchase price. So if you bought something for $1 million, I'll have a commitment for you for $1 million, which is essentially zero down payment. All the deposits you've given will come back to you at the time of closing through your lawyer.
Wow. On the basis of that.
Whoa, you got me.
So now I want you to hear from the person's mouth, because that's a program that is offering by Dewali. Dewali, I call you Dewali. So when you buy pre-construction, talk to me. I will get you to the property. I will advise you to get the proper property, that you'll be able to get the appraised value for the purchase price, whereas they can work it through you for you to be able to get the 100% financing. So I call it 100% financing, not zero down. So you get 100%.
Congratulations, guys! I'm a landlord.
Give us a parting speech for our esteemed viewers, sir.
Yeah, thank you very much, Niger Mouthpiece, the person of Philip Dike and MC Morris, the rich man. This is a very good program. I so much appreciate it, and it's very educative. We need to talk to our people and let them know what is going on. And I've been following this Niger Mouthpiece. I've seen so many programs that you guys have been doing very good. We really enjoy it. You'll keep all the good work. And I know for sure more of this is still coming. And this is more of a community building media.
Thank you very much, our esteemed viewers out there. We know you must have enjoyed this wonderful episode that brought together two important personalities that can make things happen for you. And we look forward to having you again in our next episode. Thank you very much. Peace.